We're going to see a very significant increase in the number of people living in Africa and the number of working age people in Africa simultaneously, while the rest of the world is figuring out how to, or the rest of the developed world is figuring out how to manage a rapidly aging population. Now, population growth isn't a silver bullet. That creates its own problems that have to be managed. But I think that in general, I feel pretty confident that Africa is going to play a much more significant role in people's lives than in the West than we're accustomed to now. And I think it will be very helpful for Americans to, especially because Americans have the probably the least connectivity with the continent of any large economy in the world, to really start paying attention and understanding the way Africa works, because ignoring Africa shouldn't be an option anymore. The perception component comes from that the world not only inaccurately perceives Africa, but it's a negative, inaccurate perception, which oftentimes leads to persistent mispricings across markets. So one example, a lot of times when I'm speaking with people, they'll talk about the risk of nationalization. So how does the potential nationalization affect your holdings? And I researched it as much as I could, and there's not particularly a trend of nationalization of publicly listed companies in Africa. Some agribusinesses in Zimbabwe were affected during land reform, and there's some history of Nigerian banks essentially not meeting capital requirements, and having ownership transfers there. But the idea of kind of constant ideological nationalization of listed companies is simply not a thing that happens particularly often in sub-Saharan Africa. And I think it probably happens more so than people expect around the rest of the world. So that's not a particularly acute risk to equity holdings in sub-Saharan Africa. And yet, because the global community perceives it as such, you get compensated for that risk over time. So I think there's always risk in investing. Nothing is certain. The question is whether or not you're getting compensated for that risk. For example, I think a lot of investors in the U.S. stock market are taking pretty massive risks that AI ends up being massively world changing and everything we hope it to be, which it may be, but in the off chance that it isn't, I don't necessarily see how the stock market today can keep up with the valuations that we're seeing. So one analogy I like to use is for Heron's portfolio to see a 40% drawdown, we would need simultaneous total loss events across multiple countries. We would need massive, countries of 150 million people to wake up one morning and stop buying soft drinks and beer and using their mobile phone. Um, for the United States to see a 40% drawdown, all we need to do is have global stocks revert to their long-term valuation averages. If that happens, there's a 40% drawdown in the global stock or in the U.S. stock market. Um, so in a lot of ways, I think all investing carries risk, but in Africa, you're disproportionately compensated for risk because of that misperception.
Thanks for watching. The link to the full interview is in the description. Our new book, How We Made It in Africa 2, Real Stories of Entrepreneurs Turning Opportunity into Profit, is also available now. You can buy the paperback and ebook versions from the link in the description.